Welcome. Now that we've walked you through how to conduct a fundamental analysis, the theory behind it, basically giving you a basic rundown of fundamental analysis, it is time that we go live. Yes, in this module, we're going to look at the pound dollar, the drivers behind the pound and the dollar, compare them, and make a trading decision. Let's get started. So, we are on the charts of the pound dollar, and we want to conduct our fundamental analysis, but we are on the 1 minute time frame, which doesn't suit us at all. Let's jump higher. 1 hour, no 4 hours. Let's go to daily. Yes, this is better. Fundamental analysis is talking about the long term, the intrinsic value of the currency, and you cannot get that within the minute because it's too volatile. It's changing too rapidly. But here we can see that, okay, since September last year, the pound has been on an uptrend, a pretty steep one too. Before that, if we zoom out, it was on a downtrend from about July 2021. So without using any technical analysis, we used our eyes to just check out whether there's a trend going on. Already, someone that's using technical analysis would say that, oh, this is a clear indication of a buy. But for us, if we're using fundamental analysis, we need to understand the economic indicators for each of these respective currencies, because that's going to give us insight into the true value of the pound and whether it's going to appreciate or depreciate against the US dollar. So, to start off our analysis, we are going to look at just 4 indicators: GDP, inflation, interest rates, and unemployment. But before we get into that, let's have a little background about the US and the UK economies. First off, the US is about 812% larger than the UK's GDP. So, based on size alone, we're not dealing with apples to apples. Then, according to IMF, US is the second largest manufacturer in the world, while the UK is 9th. And finally, both of their economies are service-oriented. The service sector makes up about 70 to 80% of both of their GDPs. So now that we briefly understand their economies, what should we be looking out for when we look at these indicators here? It's going to be brief, but through this, we're going to be able to determine whether the pound is a buy or a sell. So currently, we are on our economic calendar, and we are here because this is where we're going to find the information that we need concerning the indicators that we are looking for. We need to filter this. So I'm going to remove this. GDP, inflation, unemployment, interest rates are very important indicators. So probably yellow, orange, and red, we're gonna see. Oh, then we can also remove housing, consumer surveys, business surveys. Yes, leave this one. Remove all these currencies and just leave the pound and the dollar. And we apply filter. Now, what can we see? So hopefully, we're hoping that everything is here. But from what I can tell, we're missing a few, like I'm seeing GDP for pound, but it's only month over month. However, I am seeing CPI, which is the indicator for inflation year over year. This one is showing 3%. For the dollar, let's see, is CPI showing for the pound? Yes, it is, 7.9%. So we have some indicators here, but unemployment, is it here? Unemployment claims are here, but, unemployment rate is here, 4%. And unemployment rate for US is also here, 3.6%. So unemployment is here, inflation is here, but interest rates are not here, except for the US, which should be, it's coming out on the 26th of July, and the expected rate is supposed to be 5.5%. When it now comes out, we're going to know the real rates. But since we have the expected, we can also compare it to what the UK is going to release, because if you look at this, the actual and the forecast has been matching for the past few months like this. So we can expect it to be 5.5. So that's what we're going to now compare it with on our Excel sheet. If you want to find the GDP for the UK, basically the GDP growth year over year, we can go to the Office of National Statistics, search for the GDP, and then we're going to see that there's a graph here. Now, this is going to show us that in 2022, GDP growth was 4.1%. So there are other statistical websites that we can go to that are official, and they're going to give us the rates so that we can fill out our Excel table. Now, let's fill out the Excel table and see what we get. So now that we have gathered the data for our fundamental analysis, we've put them in the Excel sheet, and we've just come up with a very basic differential. If it's green, that means that the difference between the indicators is a bullish signal for the pound. If it's red, that indicates a bearish signal for the pound. And as you can see, it's mostly red with only one green, being that the GDP for the UK grew faster at 4.1% than the US GDP, which was 3.7%. Looks good. However, if you look down, inflation, 7.9%, as compared to the US economy, which is 3%. Inflation is almost double, no, more than double in the UK. The interest rates are lower in the UK than the US, and unemployment is slightly higher. These are all bearish signals, and when you compare the UK economy to the US economy, it looks like we should be betting against the UK economy. Now that we have looked at the indicators, we have seen the differences between the UK and the US indicators, it's time to make a decision. What are the reasons for us to buy, first off? Well, the UK's target inflation is 2%, same as the US's. And right now they are at 7.9%, but the US inflation is at 3%. So how is the UK going to get to that target inflation? They're going to increase interest rates. And since the UK is farther away from the target inflation than the US is from their inflation, we can see a point in the future where the UK's interest rates are going to be higher than the US interest rates. In fact, they're already very close. 5% for the UK, 5.5% for the US. So that's one reason. The second reason is that despite the unemployment, the UK's economy is still growing faster than the US's economy. Remember, 4.1% compared to 3.7%. So we have two reasons to buy. Let's look at the reasons to sell. Well, they're obvious. The unemployment was higher. So that must mean that, yes, even though the economy is growing, the unemployment is higher, it's increasing. Does that mean that the economy is overheating? Is it a signal that the economy is going to go downhill from here? The second reason is that inflation, that same inflation that they're trying to target to get down, it is still drastically high. And because it is so high, it is going to erode the purchasing power of the British pound. Meaning that citizens, UK citizens, are going to be looking to buy foreign goods more than domestic goods because it'll be cheaper outside. And foreigners are going to be purchasing less of UK goods because of how expensive it is. So what we're seeing here is that this could affect their trade balance, increasing imports and reducing exports. So we have these reasons to buy or to sell. And according to the charts, no technical analysis, according to the charts, it has been increasing since September. There's a clear path that if this trend were to continue, the pound is going to only appreciate. And we'll be thinking, okay, let's get in on it. Is it that the market is valuing the possibilities of interest rates over the current situation of the inflation being so high? Well, because our fundamental analysis is so basic, our bias is going to be leaning towards sell. It could be that, because of the previous sell-off before September, that the pound is getting back to its fair value, that it is correcting. But sticking to our fundamental analysis, our trading bias is going to be on sell. Now, it is your job to combine it with a deeper dive into a fundamental analysis. Look at other factors apart from GDP, interest rates, inflation. Look at manufacturing sales, retail sales. Just go deeper on your own. Look at news headlines. See what is going on with their economies. Then even apply technical analysis from our technical analysis course to determine the true value of the pound dollar. Thank you so much for sticking with me in this video, and I'll see you in the next video.